Okay, so this video is going through task 3 on the second AAT sample assessment for advanced synoptic. So this one, again, mainly computer marked, but there's a little bit of writing at the end. And this one, although it's a calculate, it's freestyle, so it will be human marked. So 4 marks altogether here will be marked by a human out of 13. So what's that, about a 2/3, 1/3 split roughly. This one will focus mainly on management, but as you will see, there is a little bit kind of a little bit here of, you'll see when we get there, there's a little bit of financial in here as well. Right, so this task is based on the workplace scenario new place. By the way, you can always click on this scenario context and find out a little bit of the background information about the business names and who's who. Today's date, 31st of January, X8. In December, X6, New Place produced a budget for its sales revenue, costs and profit for the year to December, X7. The budget was to sell 20,000 units of office equipment in 20X7. Fixed costs budgeted at 600,000 and the average sales price per unit 170. Average variable cost per unit 120. Right, so using the information above, calculate break-even sales volume. So the break-even formula is fixed costs divide by the contribution per unit. So the contribution per unit is selling price subtract variable costs. So 170 subtract 120, so that's 50. So I'm now going to do 600,000 fixed costs divide by 50 contribution per unit, which gives me a break even of 12,000 units. Margin of safety in units is simply the difference between my break-even units and my budgeted units. So 20,000 minus 12,000 is 8,000 units. Mo Hussein is considering a change to New Place policy for setting the selling price. Calculate the budgeted average selling price if a 30% markup on variable cost is applied. So a markup is simply taking the cost, 120, and adding on 30%. So 120 with 30% added on. So I just did 120 times 1.3. You could do times 130 divided by 100, but it gives you the same thing. And that comes to £156 as the selling price. The following are extracts from New Place's trial balance at the end of December X7. Right, so we haven't got a depreciation figure yet. We've got accumulated direct materials, direct labour, overheads, non-current assets at cost, purchase ledger control, sales revenue, sales ledger control. Depreciation for the year has not yet been calculated. Policy is 20% diminishing balance. Right, so diminishing balance, I assume we've been asked to do this. Yes, the depreciation expense for the year. So diminishing balance, we take the cost, 920,000, and subtract the accumulated depreciation, 300,000. So I've got a carrying amount of 620,000. And it's that figure that I need to apply the 20% to. So 20% of £620,000 gives me £124,000 is my depreciation for the year. Next bit, non-current asset accumulated depreciation. Right, so I know that I did already have 300,000. I've just put through an extra 124. So therefore, add the 300 and the 124,000 together, gives me 424,000. Non-current asset carrying value at the 31st of December. So the carrying value is the cost, 920,000. Subtract my total accumulated depreciation, I've just worked out to be 424,000, which gives me 496,000. Depreciation of non-current assets for the year will be it's an expense, so therefore it is a debit. Moving on. Actual sales volume for 20x7 was 20,000 units. Calculate the actual contribution for the period. Right, so if I go right up, that was all budgeted info. It's this trial balance that gives me my actual information. And to work out contribution, I know that I need to do the selling price, which is, let's take the total sales revenue, 3.2 million, and subtract all my variable costs. So it's a reasonable assumption that my direct materials, direct labour is a bit iffy because it doesn't matter if it's direct labour, it could be fixed or variable, but let's assume that both lots of direct are my variable costs. So to work out my contribution, I'm going to do 3.2 million, and then I'm going to subtract both of these, 2340 and the 180. Right, so that gives me 680,000. So just to recap, I did that 3.2 million and I subtracted the sum of the direct materials and the direct labour. So the actual contribution, it doesn't say per unit, the total actual contribution is therefore 680,000. Calculate the actual fixed costs adjusted for depreciation. They were kind there telling us to include depreciation. So fixed costs, so I'm going to start with my overheads, 288,000. And then I need to add in my depreciation of 124,000. They are my combined fixed costs, which comes to 412,000. Right, next bit. So this is a bit of a challenge. It's a calculation, but it's human marked. Calculate the Calculate the break-even volume based on the actual figures. Right, so break-even volume I know is fixed costs. So bearing in mind this is style in here, I would probably say fixed costs divide by contribution per unit, and then I would put underneath my actual figures. So the fixed cost I've just worked out here, 412,000, divide, now contribution per unit, it just asks us to work out the total contribution just up here. Oh, come on, computer. What's the matter with it? Oh gosh, sorry. Right, so we've just worked out the actual contribution is 680,000, but I want contribution per unit. So let's do 680,000 and then divide that by the number of units. So I think it just told me it was 20,000 units. Oh, it's so awkward this moving up and down on here. Sorry about this. Yes, there we go. Tells me there 20,000 units. So working out the contribution per unit like that, you could even put underneath what that comes to. This is just a freestyle human marked question. So what is that? 680,000 divided by 20,000 is £34 as a contribution per unit, which equals now let's just do this on the calculator. So I've just done 412,000 divided by 34. I actually get 12,117.6471. So to break even, I've always got to round up to the next unit. So just to be really clear to whoever's marking this, I would probably just say break even volume based on actual figures is 12118 units. All right, so that would hopefully get me those 2 marks. Explain, and this is only for 2 marks, we don't have to get too sort of messed up by it. Explain why the actual break-even point, 12118, was different from the budgeted break-even point. Right, so if I just go back up to the top for a minute, you can see we budgeted the break-even point to be 12,000. It's actually 12,118. So what is the reason for that? So if we break down both calculations, so if we come back down here, let's type it in. Right, so I would probably do something like this. So the actual break-even point is 118 units higher than the budgeted break-even point. And you could show the examiner your working. It's only 2 marks. You're not going to have to do, you know, loads, but I'll just show you sort of my thought process. So why is this? So I would then break it into its component parts. So the actual fixed costs were, what did we have? 412,000 compared to budgeted fixed costs of, so the budgeted fixed costs right at the start, I won't go up and down again because it's painful with the sizing, but they were £600,000. So if actual fixed costs are lower, that would actually have meant that our break-even point was lower because we would have obviously had less fixed costs to cover. So this on its own would have caused the break-even, let's say, was the actual break-even point to be lower. Right, so that's not what's caused it to be higher. Right, as we've said up here, it's actually 118 units higher. So then I would go on and notice what I'm doing, lots of space, lots of sort of concise, punchy points. I would have then have said the actual contribution per unit, we just worked this out up above here, was £34. Oops. £34 compared to budgeted contribution per unit of, and if I look back at my original thing, it was the 170 subtract the 120, if you remember. So that's £50. This is the main, or this is the only reason actually, this is the reason why the break-even point is actually higher. No, it doesn't read very well. Why the actual break-even point is higher. Yeah, because if the actual contribution is only 34, we've obviously got to make more to cover our fixed costs. So more units have to be produced to cover the fixed costs due to this lower contribution per unit. But that there's no way you have to write this much for 2 marks. But I'm just, as I say, just trying to sort of, if it was worth more marks, I would go further and I would then break down the £34 and the £50 into, well, is it the selling price or is it the costs? But I'm not going to do that here because it is only 2 marks. So something like that, I believe, would be sufficient. We can double check their answer to that one. Let's just have a quick look. So this is their answer. So you can see this is their, it even says candidates are not expected to raise all the points above for full marks. And it shows you where the marks are, in fact. So they've stated the point like I did, but there was no marks for that. Decreased fixed costs, which have fallen from 600 to 412, reduces the break-even volume required. So we said that, so we would have got 1 mark there. And then much lower contribution per unit than budgeted, comparing the £50 per unit in the budget with the 34. So again, you can see that there's a mark there and a mark there. So we're already up to 3 and it's only out of a maximum of 2. They've then summarised the reduced contribution per unit compared to the budget has been caused by a reduced average selling price per unit. So they've drilled further. They're just giving you every possible point that you could make, but you will only get a maximum of 2. Okay, and that's the end of that task.